Hey traders, Shane from Global Market Trader. Just thought I'd take you through our trades for yesterday on crude, the 89.6. So this is the tick chart we use for the Euro session. So starting at 2 a.m. and our finish time will be 5. It'll be 5 o'clock. But we do have traders that obviously look to trade a little bit longer, but generally from 2 to 5. But we'll have a look and see on the charts what the setups were like, because once we get a good breakout move, there's often an opportunity to take the counter trend trade. So let's have a look and see what happened yesterday. So here we started at 2:15 or 2 o'clock I should say, and you can see there that there's a short setup there on our white, and it breaks that level there at 62, but unfortunately that trade didn't go anywhere. It basically stopped out immediately. So that first trade was a loser. So we're negative 16 points. So we just start there with negative 16. Not a great start, but I'm sure we'll bounce back as we do. So our next trade is a strong push up. You see a break of resistance there, and that tells us that the trend's back on for the long side. Now, just before we got this candle here, we had our volume divergence telling us that potentially this short here was starting to flip, and the sellers were losing momentum and the buyers were coming into the market. So here we go. We get basically a buy setup there, and the entry on the buy setup is at 92. Now, some people would be looking to adjust that above the key level, but off the automation it's in at 92, and you can see it pushes up nicely. It doesn't really have any hesitation going through the 98 level, which was good. So 97, 92. The trailing profit line pushes up nicely. Now, remembering that we've got multiple ways in which we can trail the stop, depending on what your comfort level is and what your level of risk. So there's our initial swing low print, and we've got our level of support back here and our trailing stop. Now, with the Euro session, we're running a 6-point trailing stop, so we're still in the trade here. We're coming up, but you can see that our volume indicators telling us that we're getting a volume spike as well as volume divergence. So it's time really to tighten up our stops. Really, we're staying with our stop strategy of 6 on the trail. So that takes us out at 35. So the trade ended up giving us plus 43. But this is where it gets interesting, because what we've got here is remember, this is the trend trader. So it's showing you the cyan candles are showing you that there's a buy set up, and this is pushing up nicely on the trend. You see we're out there on the automation. But what we're looking for is a potential area to take a short. Now, there's our first run up, and we're still in a strong trend here. We get a pullback. Now, the second run is where we're looking for an opportunity to get short, because we've had a volume spike that's shown. So if you are manually trading the trend trader, which some of our members are, then what we're looking to do is we're looking to potentially see if we get this double top counter trend trade. So anytime you see this swing high and with resistance, and then we see this secondary high here, which is a lower swing high, and then we've got our resistance, this is basically our opportunity to sell the market. So using our previous stop, what we're doing is, as soon as we see this candle set up, so as soon as we see this second resistance level set up, we're looking for a break of this area here. So off our previous 2 candles, if we break that area, which we have there at 443, this is really our sell entry. Just there, our candles are making higher highs, and there's our break of our immediate uptrend, and that's at 58. So we're looking to be sellers at 58. So, and you can see just the resistance is starting to come in nicely. We've got our lower swing high, so that's perfect for the trade setup. So the dynamics of the setup are great, and this is where we get a higher reward to risk trade, because we're taking the trade at 58. So with our trade here, we're basically looking for an entry just on this break of this candle here at 443, and that would be in at 58. Our stop is just above that swing high at 98.74. So we've got 16 points of risk in the trade. So remembering that every time we take a trade, we're going for a higher reward to risk. So we want to make sure that it's at least 2 to 1, 3 to 1 or better. So we're letting the market dictate how far this trade's going to run. But if you're working a fixed target, then obviously you're looking for 32 points ideally or better. So let's see how this trade runs. So in there at 58, you can see that the initial move comes down and retests this level, but it doesn't break our stop. So there's no adjustment there. We start to get the trail over here, so you can see our trailing stop starts to move down, which is good. And we get down here and price starting to move down. Now interestingly, if you look down here at our candles, we get what we call the double bottom. So this is a cycle traded double top play, and it's a sell. Now if we have a look at the bottom here, support's broken, so our support level broke, and what's happening here is that there's our first swing low, and we see a second swing low set up here at 98.04. Now we're right at 98, so ideally what we want to do is we want to try to capture, if we're going to capture profit, we want to be locking in potentially, as I said, 32 points. So if you're feeling like this market may struggle to get through 98, then this would be a lock-in profit point, because remember we're still with our 2 to 1 reward to risk, so we're risking 16, ideally going for 32. So that's an opportunity for us to take profit around this area, particularly when we see this thing set up here. So this would be the perfect double bottom buy, because we're on the key level 98. We've got volume spike and a volume divergence, and this bar here is just about to break, so a 2-bar breakout here at 98.20. So as soon as that bar gets broken, then we've got a 2-bar breakout. We have almost our swing, that short-term swing high broken there at 28, so that potentially is going to get knocked out. So either way here, we're looking at possibly a break, and we do get the break. So if you tighten your stop up, which you would be looking to do, and take the break of 28, you would have made 28 points on the trade. So out at 30, because you allow a couple of points above that swing high, and that's not a bad trade result. So just using the manual trading methodology that we've developed up for the trend and cycle trader, we're looking for the trend trader to give us our initial trade, and then we're looking for anywhere where we can see a double top play or a double bottom play. So in this instance, price pushed up with the trend trader. There's the double top play, and just a great trade setup, because we had the lower swing high, 16 point stop, the resistance level set up perfectly. Now this would have been a fantastic double bottom play if our support set up around this area here and the 98 level. That would have definitely been a nice play or high probability setup. As it did, it pushed up and made a little bit, but it didn't kind of have the momentum and push. As you can see, it started to get a little bit choppy, but this is through the period where we're not really taking trades. So we find that from about 6 to 8, it tends to get a little bit choppy during this Euro session. So your better opportunities come from 2 to 5, and as I said, we're always looking for an opportunity off a initial breakout strategy for the counter trend cycle trade. Just a quick recap: the first trade is out at 16, second trade long, and that pulls us in 43 points. So the auto trader pulled in 270. Now the manual trader, we took the negative 16, got the long setup, and then we're looking for, once we get this long setup, we're looking for this double top play. So a double top or a lower swing high, and we need to have the resistance points there as well, and we're carrying over the volume spike or volume divergence. So that's our play there. It's the short of this first print here at 443. So our entry point is a close of this candle here, and there it is there. You can, as long as that's You can work an offset here by 2 to 3 ticks, or you can work a close of this candle. I like to get into the trade when I see this, so I basically am running the close of that candle. As long as I don't have a strong down candle, then I'll look to take the trade. Otherwise, if it's moved more than say 15-20 points, then I'm basically going to just work my entry point just closer to the resistance level. And you can see there, price pushes down, sets up the nice little double bottom, and that gives us a cue or a tell to get out of the market, because double bottom, we've got our volume divergence and volume spike on for the momentum buy setup, and you can see here that we lock in 28. So basically for that session total 550, and that is it for the day. So thank you for your time. If you have any questions about the V2 and trading the V2 setups, please let us know. More than happy to take you through those, and looking forward to catching on the next update. Cheers.